Hey, my name's James Nicholson. Welcome to my channel. We're going to talk interest rates. They've just gone up. The Bank of England has just done their announcement for December 2022. Now, this one is a really interesting one because it's not just a case of going up. I've got some more details to share. I've been digging around and I'm really seeing all the notes that the Bank of England has released because it isn't just about the rates going up. There's more in there and there's some indications on what we might expect going forward. So I'm going to have to look down at some notes through this video. So let's look at what we've got here. So the rates have gone up and this is the highest rates have been in 14 years. Which is pretty bad. We don't want interest rates to be high as property investors or homeowners. The lower they can be, the better for all of us. But yeah, we've had interest rates have gone up from 3% to 3.5%. That isn't what I said yesterday. I felt that they might go up to 3.25%. But what I'm going to share with you, what came out from the notes of the Bank of England, indicates that I could have been right. I wasn't right, but I could have been right. So we're going to look at what other Bank of England governors and people that are on the board there were discussing there. So this is the 9th month or the 9th meeting in a row that we've had an interest rate rise. So yeah, things have been hit hard. So why are we having these interest rate rises so far? Well, the reason why we've been having them is not something that you probably you definitely heard of. This is inflation, right? So inflation in October was at 11%. It's coming down a little bit now, which is good. America inflation is also coming down as well. So the UK inflation went from 11% to 10%. Not a big enough drop. We are trying to get it down to our target of just 2%. And how you really would do this in normal times is you would just raise the interest rates higher than inflation. So we're sitting at 10%. So realistically, what would really curb the inflation fast is just to whack the rates up to 11%. Now, this time round, inflation hasn't been caused by the consumer like it can be sometimes, or even the business owner. It's happening because of factors that they can't control. So we had a pandemic, obviously, we all went into lockdown, then people got bounce back loans, they got furlough scheme and all these things that cost the government billions and billions of pounds. The NHS had to have a lot more money spent on it at the time, and there was just a real crippling. So the government printed more money via quantitative easing. That puts more money into circulation. Then the pound is then obviously worth less money. So when we're buying stuff from abroad, we can't buy as much. We've got to pay more pounds to get stuff. And so inflation happened. And early on, I was doing actually quite a few renovation projects, and it was just talked about, oh, building materials are so expensive. That's because shipping container costs went through the roof. Some factories were shut down, so the people that were producing increased their prices. There was a number of things. Now we've got an energy crisis, so energy is very expensive in the UK and even around the whole of the world, and that's because of the war in Ukraine and various other reasons. And so inflation has gone really high, and that's our goal, the government's goal or the Bank of England's goal. The primary focus they've got is just bringing inflation down, right? They're just really focused on bringing that down. That's their priority. They're not really fussed if they send us into a recession. So we are looking at the recession sort of numbers. We're not officially in the recession, but we are dropping, and so the drop in the last quarter of this year, they're saying, is nowhere near as bad as what they were expecting. So I think they were expecting it to drop 0.3%, but it only dropped 0.1%, which is better, which means businesses haven't quite been hit as hard as they were expecting might happen. And so what they're saying now today is that the recession will still be long, but it won't be as deep. And they did say that last month as well. So they did say last month that we do think it's going to be a very long recession, maybe the longest in 100 years, but it's not going to be a real deep recession, not like a 1 or 2% decline in GDP, which is good, I guess. And so, yeah, rates have gone up to 3.5%. Now, a lot of mortgage companies have already priced this in. So I don't feel that you're going to suddenly see a huge raise in new deals that are out there. If you're on the variable rate, then this is going to hit you straight away. Your payments are going to go up automatically. The banks won't mess around with that, but they kind of knew the rates were going to go up. So before I jump into the next part, which is the interesting part, if you're finding this interesting and useful, we're actually on a journey to grow this channel to 5,000 subscribers at the moment. We've got 3,000 of you lovely people here. So as you got this far in the video, smash that subscribe button and hit the bell notification. Also hit the like button, guys. That really helps me with the YouTube algorithm. So smash that like button over there quickly. So this is where it got interesting. Now, there was a split. Now, what does that mean? And so everyone that's voting on whether we should raise the interest rates, this is where it got really interesting. There was a three-way split as well. So some people were saying that we should not increase the rates this month. I wish they were more of those people on there, but there wasn't. And so there was a number of members that said, let's not increase interest rates this month. Let's see what happens, because inflation is starting to drop and we don't want to go into a deep recession. So that was one element of the people that vote. Now here's the one that I didn't really like, and there was a number of members that said we should have gone up by 0.75% this month as well. And so that wouldn't have been great. We would have gone to 3.75% if they had the majority there, which they didn't. And then there was a number of members that said, look, we need to go up half a base point, which is obviously what ended up being the winning vote in the end. And so that indicates that we've got a little uncertainty what will happen in the next meeting. Are we going to have a rise? Are we going to have it stick as it is? Maybe the next interest rate rise will be 0.25%, right? So if you've got some people saying stick on that number, maybe we could be fortunate enough and not have that. So the outlook at the moment following today's meeting is that we're still not looking at a 6.5% base rate. We're looking closer to the 4.75% basis points, which I think is what we kind of have known for the last month at least now. And that's still where we're looking towards ending up, which is good, right? That's where I would rather be at that and have that certainty. And that's the key thing here, is we are getting some more certainty, right? They're being very clear. They're saying this is where we want to get, this is the outcome that we want. And we haven't got like a mini budget going through, which just put a spanner in the works for everybody here. That is really, really going to help investors. And I think a lot of the mortgage deals that you see out there already, unless you're on a variable rate deal, they've already priced in where they think interest rates are going to go up. Now, one thing that was also discussed was they didn't feel, a lot of analysts aren't feeling that there will be a rate drop now in 2023. It's more likely, possible at the end of 2023, but more likely early 2024 that we'll start to see these rates come back down, right? And so that's a consideration here. We've got to take that into account, guys, that rates are probably going to be high for the whole of 2023. They also felt that inflation is going to be more prolonged. Obviously, their goal is to get it down, and that's what they're really focused on at the moment. They just feel that it's going to take longer. It will keep coming down, but it might not get to that 2% as quickly as some of us would like, which is, it is what it is. Now, as a property investor, you can still do deals in these markets. In fact, there's going to be lots of opportunities in the market. I don't think today's decision really changes a lot. We kind of knew this was coming. We knew the rates were going to go up. We know that they're going to continue to go up. We know that we're going to be in a long recession. We know all of this stuff. I think house prices are going to keep going down. I don't know how far. I don't think it's going to be as deep as a lot of people think. I think it's good news to see that the recession that's like going to be there is not currently as bad as it potentially could be. That's a positive sign as well. So, yeah. I don't really know what to say. There's not really much more we can say here. It is what it is. It's not really positive news, but it's predictable news. And that's kind of good, right? We kind of want it to be a bit more predictable. So let me know, what do you think? Where do you think it's going? Where do you think the rates are going to end up? Any opinions or comments? Keep it nice. But do comment, guys. Take a little moment to comment on here. A lot of you put some really detailed comments on there, which I love reading. I love your opinions. Do like this video, guys. Subscribe to that channel, guys. Get me to 5,000 subscribers, please. I really want to get there as quickly as we can. That'd be a great Christmas present if you can help me get there. Subscribe, hit the bell. Check out all the other content on the channel, including this video right here. Bye for now.